Levels, levels, levels. If you want to be a profitable trader, you have to look at levels every single day. And that's what we're going to talk about today, okay? I'm going to show you guys some chart examples of major levels, major minor levels, and minor levels, all right? And these levels you can use every single day while you're day trading so you can build that consistency, okay? So why do we want to use levels? Levels are where big players conduct business. When the big players come in the market, guys, you have to understand they move the market. They are the market movers. They can move price around because they have a lot of money. So when they get in the market, they don't just randomly buy anywhere. They have a specific price they want to get in. And our job as traders, we have to know when the big players get in the market, and we have to know where the big players get in the market. And the when part is more about entries, and the where part is more about levels, okay? So that's what we're gonna focus on today, guys, the where part. Where are the big players getting in, and how can we spot that, right? Because we have to do this in order to be a profitable trader. In order to have a profitable trading business, you have to know when they come in and where they come in, okay? So the where part is a level. What levels do I use? I use support and resistance and supply and demand, all right? The reason why I use both is because they both are useful and they both help you gauge or understand when the big players come in the market. Now, what time frame or what's the best time frame for these levels? Guys, there's no such thing as best when it comes to trading. What fits you, okay? I know traders that don't even look at the higher time frames, and then I know traders that have to look at the higher time frames, okay? So today we're gonna go over the major levels, the major minor levels, and the minor levels. So let's go to the chart right now. So the major levels, guys, you have to understand it comes from the daily chart or the 4-hour chart, okay? Sometimes the 1-hour chart too, okay? So we're gonna get our major levels from the daily chart. So we're gonna use, okay, so let's say the market is trending from the daily chart like this. We're gonna use the swing highs and the swing lows as key levels, okay, on the daily chart. And also we're gonna use levels where price is having a hard time either going above that level or going below that level. So a good example would be like here, price is trying to go above this level, it can't. Price is trying to go above this level and it can't, okay? So we're gonna use these areas too, okay, as key levels because we know that we don't control the market, okay? The big players control the market. So for some reason, the big players are not letting price go above that area. So we have to mark that down. We know that, okay, this is a key area, let's mark it down. So let's go to the chart real quick. Let me show you guys some more examples. All right, guys, so this is the 4-hour chart, right? And this is a good example of an area where the market is having a hard time, right, going below. Look at this area right here, guys, right? You can tell that the market is having a hard time going below this area right here. So we know that, all right, if price goes below this area, there's a strong possibility that we might continue to the downside, okay? This is a very key area. And also we know that we don't even want to sell the market unless it goes below that area, okay? This is why these areas are very key because we know, okay, we want to stay or we want to kind of remain bullish unless it breaks that area, okay? Now, what's the difference between support and resistance and supply and demand? Here's the difference. Support and resistance is more like this, where we have price is supporting a level, okay? Now, demand is an impulse, okay? So we're looking for aggressive buying to the upside. So here's a good example right here. Look at this right here, okay? A good example is right here. We have aggressive buying to the upside. So right here, guys, you see this aggressive buying to the upside? This is demand. Okay, a lot of people on the internet, they get it confused, right? And they think that support and resistance is demand. And I look at the way they draw the support and resistance and they call it demand, and it's not. Okay, I kind of sort of understand what they're talking about because if you look up the regular definition of supply and demand, it can actually make sense. But we're not looking at the regular definition. We're talking about, you know, day trading terminology, and this is demand. We're looking for aggressive buying. It's like an impulse, right? It's a straight line. So notice how we have a whole bunch of green candles in a row. So notice how, let me stretch this box out right here. Notice how when it came back to that demand level, okay, we reacted to that level. So that is demand. It's not support, okay? So that's the difference, because I know a lot of people ask me what's the difference between support and demand. All right, so we have this key level, okay? So let's look at another example of a key level. All right, here's another example of a key level, guys. Let's look at this. Now, right here, we have a nice major level, okay? Right now, we're talking about major levels. We're not even talking about the minor levels or major minor levels, okay? So this is a major level right here. Now, notice how when the market broke this major level, look how it broke this level. It broke it with a lot of volume, okay? That's what we need to see. Because if it just breaks it just a little bit, that's nothing. It has to break it with a lot of force, with a lot of volume, okay? Notice how it is breaking this level with a lot of volume. That's when we need to get in the market and participate. And notice how it came back, it pulled back to, right, this level, right? And it went back up, okay? And believe it or not, this quick move to the upside, that's all we need as a trader. Now, let's look at an example of a major minor level. Let's go to the 5-minute chart. Okay, so this is a good example of a major minor level. First, we have to understand what is a minor level. A minor level is basically a lower time frame level. We're talking about the 5-minute chart, maybe the 15-minute chart, sometimes a 1-minute chart if you are using a 1 minute, okay? So this is a good example right here. We have the 5-minute chart, and notice how the market, right, can't really go below this area right here. Notice how it's trying to go below this area right here. But this is the 5-minute chart, remember. So it's trying to go low, it's trying to go low, it's trying to go low, and then we finally broke it right here, guys. You see that? We finally broke it right here. So the reason why it's a major minor level, because on a 5-minute chart, it took a long time to actually break this level, okay? Now, notice how when it broke this level right here, it broke it with force. It broke it with a lot of volume, okay? And then it pulled back. That's what we really want, okay? We want to see it break that level with a lot of volume, because if it just break it a little bit, that's not telling us that it wants to continue to go in that direction. It's telling us it breaks a little bit, most likely it's going to snap right back up. So since it broke it with a lot of force, a lot of volume, most likely this is going to continue down. So I will look for a possible short opportunity, okay? And you can get in looking for a reaction at the level, okay? And then you can put your stop loss either above the candle, right? Or above a structure, which is, to me, this structure is pretty good. If it comes above here, most likely we don't want to be in the move. So above this structure right here, and then we'll look for profits, okay? So that's how we get in the market. Can you get in the market blindly, just shorten a level or buying a level? You could, but honestly, it's better to look for reaction. So let me show you guys another good example. Okay, so here's another good example of a major minor level where price is having trouble on a 5-minute chart, okay? But if you switch to the 4-hour chart or the daily chart, this minor level is not going to even show up, okay? This only looks major if you go into the 5-minute chart. So that's why I call it a major minor level, because it's a level that on a 5-minute chart, for some reason, it's taking a long time to break that level. So when we finally break this level, notice how it broke it with a lot of volume, right? And then it went up. Now, sometimes the market will not pull back to these levels, okay? Because I'm more a pullback trader. I like the market to pull back to these specific levels so I can take a trade. I look for reaction. But sometimes you won't get a pullback, okay? So what should we do with that situation? Well, it's up to you. You can be a breakout trader if that happens. So instead of, wait for that pullback, you wait for a breakout out of the high right here, okay? And then you take that long and you look for that continuation. You can do that. Sometimes I, take breakouts like that, but I'm more a pullback trader. I like it to pull back to that key level and I look for a reaction. So let me show you guys minor levels so you can understand the difference between major, minor, and minor levels. So let's go. All right, guys, so here's the minor levels. These minor levels are on a 5-minute chart. You can use them 1-minute chart too. But basically, we're looking for these swing highs and swing lows on a 5-minute chart, and we can use these for levels, okay? So these levels I use all the time because sometimes my major levels are not in play, right? And we can use these swing highs and swing lows on the 5-minute chart to get in the market. So right here, let me erase this. So right here we have a minor level. Notice how it hit that resistance. It sold off right here, all right? And basically that could have been a trade for you. Notice how right here we have support and it bounced off that support, okay? Also, we have this minor level right here. Resistance turned into support. So all these key levels right here, guys, these key levels are potential trading opportunities while you're in the market. I know a lot of people love to do top-down analysis, go to the daily chart, go to the 4-hour chart, go down to the 1-hour chart, go down to the 5-minute chart. I get it. I understand. That works, definitely. But some days, especially if you're trading one market, okay, you're not going to get that perfect picture of that top-down analysis. So the next best thing is to use these minor levels, these minor 5-minute swing high levels, because they still will give you these good trading opportunities while you are trading and looking at the market. So that's how I approach the market, guys. I approach it with these major levels because I want to understand how's the daily chart looking. Are we at a key major level? And also I'm looking at these major minor levels. Why, I'm looking at a level where the market is trying to break, but it can't break. And when it finally breaks it, maybe I want to, participate, okay, if it pulls back. And then I'm looking at these minor levels every single day. When it hitting these swing highs and swing lows for trading opportunities, I'm looking for reactions. I'm looking for maybe a double bottom, a double top, a nice bullish candle, a nice bearish candle to get in the market, because I know big players get in at specific prices, and these specific prices are support and resistance and supply and demand, okay? So I want to ride the wave when the big players get in the market, and that is it. So that's why key levels are very important to use while you're trading. Make sure that you study these key levels. Try not to blindly buy these key levels at first. Just get used to looking for confirmation and go from there, because these levels will help you with consistency, okay? Now, don't expect to get this stuff right away. You're gonna definitely need to study this over and over and over. Get your brain used to these patterns, get your brain used to these levels, get your brain used to how the market reacts at these levels. And don't look for a 100% win rate. That doesn't exist, okay? But these levels will guide you and will help you be consistent once you understand these levels and once you see the reactions at these levels. That is honestly one of the main keys, and you go from there. So those are levels I use every single day. Back test this, use it with your trading, and will definitely help you. That's all I have for you guys today. If you want to learn more how I trade, link in the description, comment below, because I try to answer all your guys' questions. Thanks a lot for your time. Make sure you watch this video more than once, or watch more videos that I have on my channel for more strategies and more psychology videos. So thanks a lot for watching. Hit that subscribe button for more videos, and I'm out.